Who crashed the market? FUD or fundamentals? We'll take a closer look on this week's Exodus Market Recap. The market's down from last week as the FUDsters decry the sky is falling, while more pragmatic individuals double down on how this is the perfect opportunity to stack more sats. Welcome everyone to the weekly crypto summary. We'll dig in a bit deeper into what caused the sell-off after the quick news summary. This week, Fed Chairman Jay Powell confirmed the US is looking into developing a digital currency. We have assessed, and we continue to carefully analyze the costs and benefits of pursuing such an initiative in the US, said the Federal Reserve Chairman, as he wrote in a letter to lawmakers this week. The popular privacy coin and a personal favorite, Monero, was subject to a hack where malicious code was injected into the official Monero wallet. A Monero core dev said CLI libraries on the getmonero.org site may have been compromised. The vulnerability was quickly patched when found, and anyone who is running packages from any wallet provider should always check the hashes from the developers to confirm they match the hashes of the downloaded program. That's a bit technical, and I'll include a link to the article on the Exodus support site about how to do this with your Exodus wallet. Blockchain investigators Chainanalisys laid off 20% of their workforce this week, which equates to about 29 employees across many departments in a move to lead to, quote, path to profitability. Another Canadian exchange disappears with customers' funds. Einstein Exchange was being investigated by the British Columbia Securities Commission. Apparently, the exchange did not have possession of all the customers' funds, and after the BCSC requested financial records, the company owner closed the offices and left customers high and dry with empty wallets. How many times do we have to say, not your keys, not your Bitcoin? This week in DeFi, we saw the swap of single collateral DAI into multi-collateral DAI. This long-awaited move by DeFi enthusiasts is a major milestone in the evolution of DeFi. To see how to swap your old SCD into the new MCD, please click the link at the end of the video. In investment news, Greyscale is filing with the SEC to register its Bitcoin trust and, if approved, will make them the first crypto company to report to the SEC and have an investment structure which is more familiar to traditional investors. PayPal, the global payments company, joins a $2.4 million round of investment for TRM Labs, a crypto banking compliance startup. Usually at odds, crypto and banks make for unusual partners. What do you think? Will this lead to adoption or the destruction of the crypto ecosystem? Please leave a comment below to join the conversation and mash the like button on the way down. We're going to take a closer look into the recent market movements and the potential causes. Addressing the elephants in the room, there are a couple of theories about what caused the sell-off. First is the apparent shutdown of the Binance Shanghai office, as reported by The Block. Sources say the Chinese government raided the office, which hosted some of the company's top executives, including CZ himself, who then relocated to Singapore after the raids. After the initial reporting, CZ posted a tweet saying this was FUD, and Binance doesn't have any offices in Shanghai. He then denounced the report as fake news. The Block then shot back, doubling down on their story, and Binance eventually announced they'll be filing a lawsuit against The Block for its story. Then they reinforced this by the decision to create a $1 million fund with contributions from Justin Sun, CEO of TRX, to help fight against fake news. Now this is an extreme politicizing from either side, as now two of the most wealthiest men in crypto have the means to decide what is real and what is fake reporting. The claim of this raid having an impact on the sell-off doesn't hold water to me when I compare other recent negative Binance news to market moves. If you remember, Binance was hacked and lost $40 million on May 8th. What happened to the market at that time? It finished in the green that day, and it's currently sitting about $1,000 higher at this moment than it was back then. Could the sell-off have been triggered by the reports of the Central Bank of China's crackdown on exchanges who are defying China's cryptocurrency trading ban, which included more than just Binance? However, this ban's been in effect for some time as China seeks to move into a blockchain monopoly in the country. Or could we just be looking at a bear market heading into the halvening? Leave a comment below to join the discussion and let us know what you think. Let's take a quick look at the numbers. The Bitcoin price is hovering just over $7,000, and the last time we saw this level was all the way back in May of this year. However, we're down just over 16% in the last 7 days. On the brighter side, though, BTC is up 32% over the last 12 months. Let that continue to illustrate the power of BTC against the dollar. The current crypto market cap is sitting at just over $200 billion with a 24-hour trading volume of about 76 billion. BTC dominance remains about 66%. All right, taking a look at the portfolio, we can see the recent downward trend has done its damage. Filtering by price, Bitcoin plus 0.1% at $7,274. $131 billion market cap with a $20 billion 24-hour trading volume. Maker sitting at number 2, 553 plus 4%, $553 million market cap. Bitcoin Cash, followed by Ethereum, $151. Fees on the Ethereum network were really high the last couple of days, and there was a little downward trend there. It's been following Bitcoin pretty closely, followed by Bitcoin SV at $107, making a little bit of a climb. $54.80 for Dash. Monero, $51.43, still hanging on in the top 10 there. Litecoin at $47.59, followed by Zcash, Decred, and Binance Coin. Let's take a look at the 24-hour winners. Bitcoin SV, double digits, 11%, $1.93 billion market cap with a $720 million 24-hour volume. RLC up again, 8.89%. Pretty decent 24-hour volume on RLC, $4.15 million. All right, followed by WeTrust at 7.5%. Cosmos, new addition to the Exodus wallet at 7.49%. DGD, Binance, MCO. 24-hour biggest losers: Storm, Vibe, and Dash, 3% all the way down to just about 1% here. If you want to take a closer look at any of the 30-day trend lines, you can go ahead and just click on the asset, click into the wallet, go ahead and toggle down the 30-day price average, and you can see the 30-day price average charts here inside your wallet. This works for every single asset that you have. You can go ahead and filter through those. So instead of looking just in the portfolio view, we can actually see what each asset looks like in the wallet. Thanks for joining us, and please leave a comment letting us know how we're doing and what you would like to see more of on the program. Be sure to hit the trifecta of like, share, and subscribe. Don't believe the FUD. Crypto will continue to grow, and it's a better time than ever to download Exodus and start stacking sats to the moon.